Hello, everybody. My name's True Demon, and I'm the Devil's Stockbroker. I'm bringing you a quick update on BBIG to let you know that we actually tripped one of my signals, and the event that I've been waiting for has arrived. BBIG had a dip below $1, and it has struck the liquidity signal level that I was waiting for, and it has risen above support. So now I'm expecting a big bullish move to the upside. In order to corroborate this, I'm going to compare some TA and look at some of the other data to see where we could go in the near term. So first, let's do a little bit of TA. BBIG has been consolidating down in this descending wedge for quite a while now, since the beginning of January, and obviously we've fallen to lows that we wouldn't like to see. However, this has given us an advantage of letting us know where our upside is and where we need to hit in order to see a bounce. So, BBIG's finally been consolidating down in this level for a consistent, I'd say about 15 trading sessions. At the moment, we're coming up on day number 10 of BBIG down consolidating below the $1 below the $1.15 level. We had a pop just above it yesterday, and then all of a sudden there was this what a lot of people interpreted as a rug pull that drove the price back down below $1, and that institutions are afraid of it running. Here's the thing. I don't think that that's what this means at all. What I think that this means is that institutions are hunting for liquidity, hitting stop orders, stopping out retail, trying to collect as much shares as possible at the lowest price available in order to prepare for a new run to the upside. So this is actually the time to be buying, not to be selling. Not financial advice, but liquidity hunting is an event where a market maker is consistently trading the stock within a specific range or a specific level. This is the structure that we have been trading in for some time. Notice that we had hit this price once before at 98 cents. The last time that we did, there was a slow grind to the upside. We've been moving back up to that upside at $1.14 when suddenly the price was struck down early in the morning today, and now we have hit those new lows, or rather revisiting those lows, I should say. So if we come back down to the 10-minute chart, observe the lines that you see here on my chart. What you'll see is there's a bunch of gray lines here. These represent levels of liquidity that you can see in the market. Basically, they're resistance levels. But what you see here is that there's a consistent resistance level here in this trading range, or this structure that we formed. Now, we were heading towards the upside, and typically you would expect to see a bump against the top of the structure before it either consolidated back down at a relatively equal pace or broke out to the upside. But we didn't get that. We were heading towards the top, and then suddenly rug pull, fall down 13%, breaking down to revisit our lowest low of 98 cents. And now that we have touched this level, we've immediately bounced back above. This is a liquidity hunting signal. I've mentioned this many times before, but after seeing a high amount of volume driving the price down below the levels of support that we've seen, which was $1, as soon as it broke down below this level, within 5 candles on the 10-minute chart, BBIG broke back above that level and regained support at $1 and started barcoding again. This is a signal that institutions are loading up the bags. This is what they are trying to do. They are trying to stop out retail that were holding this $1 level as an area of support, convincing them to let go of their shares because the play is over. That is what this target was. However, they didn't get that. Notice the volume shelf. Tons of buying volume down here. Tons and tons of buying volume down here. As soon as it struck this area, the volume on this candle was massive. Just on this single red candle that brought us down below the $1 level, we had 1.5 million shares traded in that entire time. While we were trading below $1 in these candles, it amounted up to 6.125 million shares traded in just 1 hour and 30 minutes. It regained its support and consolidated back above $1. This is a sign that retail is not getting scared and they're pushing the price back up. Revisiting the Ortex data, we can see that the days to cover is consistently rising due to the low volume and the increasing short pressure that's been building up in BBIG for a significant period of time, more than a year now. Right now, our short interest is estimated by Ortex to be sitting roughly at about 34.79 million shares with a heavy 100% utilization, which we've been at consistently since August of 2021. The cost to borrow has recently hit an all-time low, and I suspect that this means that due to the heavier return on shares, the institutions are backing out of their short positions and preparing for the move to the upside. This is when retail needs to see the signals and read the market. There is there is momentum coming into BBIG, and it is coming very soon. Now, I don't want to encourage anybody to buy anything without understanding it, and I don't want anyone to jump into any stock or investment just solely based on the influences and what a single YouTuber says. So I want to try to explain what's going on. What I'm showing you here in this bar chart is the security lending volume, and if you compare it to the trend of what the short interest has been doing, you notice that it's going down. Security lending volume includes both selling and buying, so shorts covering could absolutely be part of what's going on in the stock. It's at its lowest point right now, so this is the ideal time for any shorts who are switching long on the stock to be flipping their positions and getting ready to, one, exit their short positions, and two, grab a long position in order to get in for the move to the upside. An additional piece of data to pay attention to is the on-loan average age. Previously, before we had moved down to this area, our average days on loan was 65.4 days on average. This means that on average, the total shorts that had been consolidated to this point, they got into their position more than 2 months ago. This was back when BBIG was trading at approximately $3 per share. We're now back down below $1 per share. In addition to this, the put call ratio is immensely bullish, showing a 0.11 value on the PCR. This means that for every put out there, there are 10 calls on the chain right now. We also can see that the return shares and the borrowed shares clearly are showing that shorts are exiting their position. The average cost to borrow is consistently moving down. All of this points to covering. Institutions are getting ready to switch long, and that means that they want this stock to start going up, but they don't want it to go yet. This is the time for everybody who is looking to squeeze shorts to strike. It's the ideal time. There's no other way to say it. The stock is at its lowest point now, and whether there's a move to the upside now or a month is going to be the difference between a short squeeze versus just a long play. One additional piece of data that I want to show you is what the current call chain is showing for BBIG. This is a gamma ramp visualized based on the percentage of the float that is currently in the money at a specific strike price, which you can see here on the x-axis. As BBIG moves up each strike price, you have an increasing ramp. However, what this is not showing you is adjusted options. These are the BBIG1 and 2 BBIG1 options that are hidden on the chain, which are more than 3 times this size. That means that just based on estimates, this is only the regular call chain, showing that if BBIG rose to $1.50, that 4.4% of the stock would be in the money just before the last Friday of August. In reality, this is closer to 12 and 13% based on those adjusted options, which cannot be traded. If those went in the money, there would be more than 12% of the stocks float in the money on the call chain. This is why shorts are getting out of their positions and why I suspect market makers are trying to load up, get it out of as many calls as they possibly can that they sold previously, and start buying calls from other retailers, trying to get them persuaded to let go of their tickets. A more granular look at this, we can see that most of this is concentrated at the 1.5 strike price, which is expiring between next Friday and Friday, August 26th. There's a lot of concentration around this strike price. Market makers may try to hold it down, but I have some faith that if the price starts moving against institutions who are still holding short positions against BBIG, that this does have the potential to squeeze rapidly. And if any outstanding naked calls are still being held by market makers, those will have to be delta hedged before those go in the money. This can lead to a runaway effect where the gamma ramp is realized and we see the price rocketing towards $1.50 and even $2 beyond that. As that excitement takes effect, I suspect that we might see a little bit of FOMO from retail, but if it has to happen, it has to happen quickly. I want people to be very careful because I don't want to set expectations too high, but just based off of the technicals that I am currently seeing, BBIG has broken into that liquidity zone that I had called out previously. The next step is for it to start making moves to the upside and break out of this level at 118 that's been holding us down for a significant period of time. The upside beyond this is to reach the top of our current ascending triangle, which you can see here on the hourly chart. If BBIG manages to break out of this triangle before we hit those August expirations, there is a chance, although a small chance, that BBIG could break out to the upside and head towards $2. I have much loftier price targets than this for the long term, given BBIG's current financial situation, but I'm trying to stay at least pragmatic when I look at these tickers because we've been rug pulled before. All the same, at least for the sake of a swing trade, BBIG has hit the low that I was expecting it to hit before it makes its next leg upward, and this is the same move that it made back in August of 2021 before it rocketed all the way from $2 to $10. So if there's any chance of something like that happening again, where you see institutions switching long and diving headfirst into this stock, driving the price up, then this would be the ideal time. That's going to have to be it for this video. Again, nothing of what you've heard is financial advice. I can't tell you what to do with your money, and I am not recommending that you buy or sell anything. I'm just trying to bring to you my own interpretation of what I see BBIG possibly doing in the next 30 days. All that being said, thank you guys so much for watching this video. Please consider liking the video and subscribing if you haven't already, and I'll look forward to seeing you next time. Until Monday, have a hell of a weekend.